Hope everyone's doing well. This is going to be a video over yesterday, the 23rd of July. Coming into the day, we had a gap up. Prior day, gapping far above. Bar 1 is a doji, which increases the chances that we are going to have to pull back. And first off, either way, I think we're going to pull back. Bar 2, bear bar, closing on its low, but probably buyers below. Big gap up, so odds are we're going to go sideways. Lower probability we get a trend from the open. And if we do get a trend from the open, and we'll see it, we'll get another big bear bar closing on its low. But right now, it's a gap up, it's a breakout, this is a pullback. Odds are we're going to go sideways. I do think we're going to close this gap because of the daily chart. We've had a lot of days gapping up and going higher, so I expect that to us to have disappointment. 3, high one buy. Bulls bought more lower, so it increases the chances that whatever we get will be a bear leg in a trading range. May have to get a wedge. Most days you either get a wedge bottom or a double bottom or a wedge top or some sort of double top. And okay, tried to break above bar 1. The bulls see a breakout pullback. Bears want to see a double top, and then the next bar be a bear bar closing on its low and some sort of measure move down. And that's what we're trying to get, bear bar, but it's rather big, forcing you to sell at the bottom of the range. Not a great sell, low probability. So if it's low probability, then what you have to think about is if I'm going to sell on a stop, this is 1 times my risk, 2 times my risk. So I really need to go all the way down here. Follow through, but disappointing. 2-legged pullback. Some bulls will buy the close. Bulls bought this low, scaled in. Other bulls are going to buy this low over here and scale in, betting that we can at least get out break even. Some bulls are going to buy, betting that we'll close this gap or that we'll get back to the stop entry. Bulls buy here. They're confident that even if I buy lower, I can get out of break even. So some bulls scalp out. Other bulls buy more lower and trying to let them out, and it let them out. So what you have to remember is whenever you get, it's difficult. If you're selling, you've got to scale in. If you're buying, you've got to scale in lower. Here, it's a wedge, 1, 2, 3, not a good shape. More traders will probably just see 1, pull back, 2, pull back, and maybe 3 to a wedge bottom. So bulls are trying to get the breakout above, but again, tight trading range. Odds are we're going to have to get closer to the moving average. You can call it a double top, triangle, or double top pullback. So first, second, pullback, third. Doesn't matter. Tight trading range. And, right here, one thing to point out, the bears are not doing what they need to do. And eventually, it increases. The odds are slightly better for the bulls than we get the bull breakout because we gapped up. So breakout, but again, it's closing in the midpoint. A lot of traders want to wait and see what the follow through looks like. This could just be a breakout and then a 50% pullback. You still have traders trapped that sold these highs. So one of the important things to think about is, are traders going to get trapped if they sold the breakout, they scaled in higher, they could get out at 50%, but are they going to be able to get out here? So breakout, follow through, this could be a trap, and you have to be thinking, we're starting to get a small pullback bull trend. This could be the start of a gap and a pretty decent rally. And, again, if you would have gotten this, it makes it more clear and a lot of traders would get out. But if you get a breakout and then follow through like this, it's harder, it's more confusing. Increases the chances of more up. 3 consecutive bars. A lot of traders, if they sold these highs, they're going to get out after this and just take the loss. And that's why traders are giving up. Reason they're going to take the loss is, again, if you sold, you got to have a stop somewhere. So if I'm selling these highs, you have to think about what's my target. Maybe a scalp, 2, 3, 4 points down. And again, I'm not paying attention to how big. These bars are pretty big. So this bar right here is 3 points. So maybe a 4-point scalp, who knows? But if you sell up here and you get this, then you get this, at some point, in theory, your risk might be all the way up here. And if you're scaling in, you've got to be able to get out quickly because of the math. I mean, if you're selling here 81 to 84, 85, and that's 4-point loss. So you've got to be quick to get out. So traders will probably get out. We have a successful breakout. We're probably going up. Bulls are going to start buying the close, but they're going to be nervous that we're pretty far from the moving average, so increases the chances that we're going to have to pull back a little bit. So bad follow through, breakout bar. Let me zoom in like this. And this will help. So bad follow through. A lot of bulls may be disappointed and look to get out over here. Tight enough channel though, the first reversal down is going to fail, and then we get another big bull bar. So starting to get climactic. Wedge 1, pullback 2, pullback 3. Bad follow through again, but very tight channel, parabolic. So probably not going to have the low of the day, or excuse me, probably not going to be the high of the day, but we could start to go sideways, pull back rather deeply, and test the highs. So we're still going higher, very climactic. No reason to sell yet. Bear bar closing on its low. Parabolic 1, pause 2, pause 3. Or buy climax, pause, buy climax, pause, buy climax, pause, buy climax. No matter how you want to look at it, it's consecutive buy climaxes, but the trend is really strong. So it's not a good idea. It's easy to see this and say, oh, can't buy here, got to buy a pullback, and now all of a sudden you're up here. So that's why it's important to try and trade always in or get long when you can, and just trade really small. So if you're buying over here, stops all the way down here, maybe here. If you buy here, stops probably still down here. Would I get out here? I'd probably get out of shorts here. I'd get out of longs. I wouldn't go short. Channel's pretty tight. Odds are you could get it an endless pullback and a rather deep pullback, but I think it's easier. It's easier to get out of longs and look to buy lower. It's really difficult to sell for a scalp. And that's kind of why now you have a high to buy. It's possible that you get an upside breakout a little bit more higher. You can buy it, use a wide stop. I'd probably wait. I still think we're going to have to touch the moving average. Breakouts at 1, pause 2, pause 3. It's a wedge. Bull bar closing it, basically at its midpoint. I think it's okay to buy anywhere over here and use the wide stop, but I still think you're going to have to get to the moving average. So if you buy, you may get a failed breakout of a wedge and go a little bit lower. So bulls tried to touch, but we didn't quite get there. So at this point, you can call it a two-legged pullback. Would I buy here, stop down here? I wouldn't. You can, but again, tight trading range. I think the odds are we're still going to have to get below the moving average, at least a couple of legs or a couple of bars. Double top, is it a major trend reversal? No. Two little bars down, not enough sideways. It's not enough to make it major. Could be a breakout pullback and a channel. So bulls are trying to channel. We got a little bit higher, not big bulls, bull bars overlap here. A lot of bulls are going to be hesitant to buy here because of the buy climaxes here. We haven't touched the moving average since yesterday, so we're at 12:15, so that's almost 4 hours plus these bars. It's just a lot of bulls. Really, I wouldn't want to buy up here. I'd rather buy at the moving average. And you can see it makes it difficult though, because people want it to go below, and now we're getting there. So we touch the moving average. Do I buy? You could. The moving average is 44 even, the low is 44.50, so arguably we touch the moving average, but it's still not all that great. A lot of people want to see price go below the moving average, but again, if you bought anywhere here and used a wide stop, you were okay. So if you buy here, can you use a wide stop? Sure. Is it down here? Probably, but I don't know, we could still easily fall there. Losing a lot of energy. Finally broke below the moving average. Tight channel, a triangle, 1, 2, 3, 1, 2, 3, doesn't matter. It's a contracting triangle. So in general, 50-50 chance you get an upside breakout or a downside breakout, 50-50 chance the first reversal fails or the first breakout fails. At this point, I would just wait for the breakout up or down. Not a lot of energy, easy to lose money. So there we go. Breakout bar. Let me zoom in a little bit. So breakout bar, closing below these lows, but again, tight trading range, not that great. Follow through, not great. Big bear bar, closing back in the apex of this triangle, but it's the first. I'm going to screw up the chart a little bit, but that's 14-15. So it's the first bar out of all these to get a bear breakout that's fairly strong. 30-minute chart, not even really noticeable. So the channel is really tight, that's all I'm getting at. And then you get bad follow through. So bulls, is it okay to buy here? Probably okay. You could buy here, put a stop below. If I did buy, I probably, with it being so late in the day, I would put a stop below the bar. I wouldn't want to ride a deep pullback and risk losing more and getting trapped. So bad follow through. So let me explain this in a better way. So what happened here? This is actually something that's important. It doesn't look important, but it is. So if I sold the close here and I'm disappointed, how can I get out? Well, one thing I could do is, I'm not recommending to do this, but if I sold the close here, I would get out above the bar. But if I did sell here, in theory, I could sell more above this bar and then look to get out at a 50% pullback and basically break even on the trade. That's one way to do it. Other traders, which I think is more realistic, is this is people buying both ways. So you have bulls who see this big bar. They don't want the big risk. So instead of buying above the bar, they put a limit order at 50% to buy and put a stop one tick below. So they can at least have a 1-to-1 risk reward. Bears know this, and that's why they'll do the same thing. So I think it's more likely the bears that sold this close, they see this bar, they know they're in trouble. They know the odds are we're probably not going to get back to this low, but we may pull back 50%. So they may look to get out and avoid a few, 6 ticks and save 6 ticks. Again, I wouldn't do that. I don't think I'd be willing to buy at a 50% pullback, but I would not be willing to. If I was short, I'd get out above the bar. There's too much risk that you would mess that up and you get a big breakout and take a big loss at the end of the day. So follow through, good for the bulls. Stop down here, big bull bar, but a lot of bulls, they're going to scalp at the end of the day. Some traders might hold. And then big breakout bar, closing far above its high. A lot of traders will start to take profits. 3 legs up, 1, 2, 3. It's an okay buy. You're now basically at the top of a channel. You can do that. You can do that. I think a lot of traders are just going to say it's basically a wedge. Disappointing follow through late in the day. So because it's 14, this is 14.45. I'd get out below this bar, or I'd look to just take profits up here. Certainly get out below this bar. Second entry, definitely get out below that bar, and reversed. So as far as always in, bulls, maybe they buy here and use a wide stop, or they buy here. Let me try and do it more like this. Bulls can buy here, stop below, and if they get stopped out, they buy again, stop below. Breakout, follow through. Bulls, some bulls will start to buy, put a stop below. Buy above this bar, stop below. No reason to get out yet. And then a lot of bulls will get out below this bar. And second leg pullback, you could buy above here, wide stop. And this is important. I said it earlier, it's so strong, you can buy anywhere. So a lot of bulls will trade much smaller than they need to and buy and scale in lower, because if you buy here above this bar, You buy this close, you buy this close, you can get out and make profit. So I think a lot of bulls will do that. I mean, either way, you could trade always in many ways. You could say, this isn't strong enough to be a reversal. I'll keep a stop down here. Nothing, can't move my stop yet. Okay, we got a breakout, so I'll move my stop to here. No major trend reversal yet. Remember, stops down here. And, maybe it stopped out. Do you get stopped out there? 96 even, 96.50. So you didn't, it came within a few cents, and then you're up here. I wouldn't do that. I think it's easier it's hard to hold the entire day, but hope this video helps.